But I want you to take a look at how the market respects the 25% BT levels. So if you're aiming for this, again, the base premise, market only goes higher or lower for liquidity. Let's just assume that we wanted to see this low being taken. Once the market closes below it, then it means that we want to see it being used as a means of resistance. Market does that, never closes above it, takes on this low. This is created as an order block, mean threshold. Market never passes it, use it as a means of resistance. Goes below this once again. We're looking at this busy. We want to see the consequent encouragement fail, and perhaps it did. Immediate rebalance here. Market should be seen with speed below if we're correct on this level of sell side being taken. Also, this is an expansion order block if we're going to talk about the market expanding lower. And here is where most of your questions are. It's like, Stoyan, is this a busy? Like, should this be respected? Or what should we do instead of this exact candlestick? And I respond with a boring, same answer. Well, what is your narrative? Well, if we're looking higher instead of this busy, if we're looking for the market to go above this high in this very moment, then we should see the consequent encouragement being respected and the market to go higher. If we're looking for lower prices, then we should see this fail and the market should go lower with speed, and this immediate rebalance should have been respected. There you go, that's your answer. And if you're not opinionated, then, or if you don't have a clear understanding of price, then you're just going to read and you're going to wait for the sign. And of course, we have to have a level of sell side or buy side being taken as part of our model. But at the same time, if I'm going to look at this only chart, I'm going to understand that this should have been an immediate rebalance. We failed. Created a swing low instead of the consequent encouragement, if I'm not mistaken. See the respect. Market closed above the main threshold. We can use that as a means of support if we're going to continue higher. This level of sell side being rated if we're going to go higher again. This can be constituted as a shift if, again, we were bullish. We would want to see this as a breakaway gap, which means that this is the first, second candlestick of a fair value gap, and the third. And if you want to see a gap formation, then we should not go below, we should not go inside of this high, which means that the inefficient part would be below or between this candlestick's high and this candlestick's low. So this low should not come to this, which means, and this is one of my studied signatures, and you can of course steal it, which means that the market will only go into the 75% of the previous candlestick, right? Because we want to see a fair value gap being created, or the 50%. So if you're looking at a daily chart, if this is the daily chart right here and we're anticipating this to be a breakaway gap, what is this day supposed to do? Open, go back to the 25% of the last candlestick or the consequent encouragement, or whatever this is, 50% of the previous daily range, then continue higher. So how do we know if the low of the day is being created? This is how you know, right? Just a quick gem that I could share with you. So right now we have a non-visited busy. Let's see how it performs. We're within the 848 or in close proximity to 850 to 910. I'm looking at this volume imbalance, see how it wants to be performed or how it wants to perform. Where instead of the first, second, and the mean threshold of this should not be passed through if we are bearish. But if it does so, then what does it mean? That we're bullish. Or the fact that we're just going to consolidate between these. Because if I don't have a clear narrative upon what the market wants to do, then everything can mean everything. Volume imbalance, fair value gap high, and we can potentially see the market running this, then coming back for this levels of sell side within the 930. But I'm not going to get lost within the 1 minute chart. So I'll just not care about this 1 minute price action right now. I will just tape read it like I would be tape reading it without a hard opinion. So if we are bullish, we should close above this. This right here is an institutional order flow entry drill, which means that the market only went to the fair value gap high and this volume imbalance, which gives us the beautiful perspective that this would be a breakaway gap. This is a shift. Mean threshold should be closed above, should be used as a means of resistance, support. If we're going to go above this, this can be used as a dynamic level of support or resistance, which means that this can be used both as resistance and as support if we close above it. And within an opinionated, bullish perspective, this should be absolutely respected. And you're going to see that when the market is very easy to see and very clear, you're going to see all of the signatures that I'm talking about occurring. This right now should be an expansion order block. So I'm looking at the high in the opening price. I want to see the market close above the constant encouragement of this wick. Same time, I'm looking for the PD raise first, second, and the mean threshold is the last line of defense. I'm looking at the constant encouragement. If the market closes above the upper quadrant here, then this is a very good sign of strength too. And within our bullish continuation CPI idea, then this should constitute the only retracement that we're going to see throughout this day for the after CPI movement. So I want to see the market go higher. I'm looking at the mean threshold here based on the fact that we closed above the constant encouragement of this wick, and at the upper quadrant I wanted to see higher movement with speed. I would want to see the market close above the 25% BT and go into the constant encouragement of this, which is the next. So as you can see, what I do is I just read and I look at what PDRAs are in close proximity with the current price. BC high, we should see the market close above it, which would mean that I would anticipate this to be an intermediate term low, which should not be taken if we are bullish. Looking at the upper quadrant here, constant encouragement of this wick and the mean threshold again. And I allow for constant encouragement of the wick, the order block high, opening price, and this. This will not be counted in as one of the PD arrays. For 3 PD arrays to be violated, I only look for order blocks and inefficiencies. So I'm looking at this here. $8.50 to $9.10 is now in action. And if we are going to be bullish, then this swing high that is created, I would want to see that being run right now with speed. I do not want to see this stay in. If this stays in, then our bullish narrative is problematic, or this is a warning sign for our bullish narrative in this exact time period. Let me put the constant encouragement of this. Close below it, above the upper quadrant. I want to see this fail right now and close above the constant encouragement of this wick using this order block high and to trade above this. And if we trade above this, we're going to trade above it with speed because the market has delivered both buy side and then sell side here. And the purpose, again, coming back to the premise, the purpose of price is to deliver in a balanced manner for smart money. Buy side, sell side. So the next time we're going to go here. If we're bearish, this should have never been visited again. Consequent encouragement. I'm looking forward for the market to go higher with speed now. We use this auto block. And let me look at the mean threshold here. Close above it. I want to see this if we're correct. That means of support. I'm looking for first, second, again the third. As I'm looking inside of this range, there is no inversion gap for the market to key off. So let's be patient. Okay, swing high is being taken. If we're correct, the market should go higher with speed, and this should not be a buy stop run only. I like the fact that and this is one of the things that I was talking about. So if we understand that all of the concepts apply on every singular time frame, then this is one of the things that I was talking about in terms of the daily range, right? The market opens lower and then closes on high. I was talking about the signature when I was amplifying to Martino, if I'm not mistaken, when we do not want to see the last hour trading perform in the opposite direction. So in the obvious, and this immediate rebalance here should perform higher. But this here is when the last hour trading, if this is a daily chart, this is when the last hour trading should not perform in the opposite direction of the daily direction. Immediate rebalance should perform higher with speed. We should use this level as a means of dynamic support. Consequent encouragement of this can provide support to order block, opening price, and this again can provide support. This, and my last premise would be this. In terms of the immediate rebalance, this is not what we want to see. Looking at the mean threshold of this order block, so I'm going to remind you, if you're looking at on failed immediate rebalance, the market can either consolidate or reverse. So I'm cautious with this narrative that I'm applying. Looking at the mean threshold and the 75%, I'm looking at the body closures. I'm also looking at this, if we are correct, as a future bullish auto block, which would imply the fact that we have to go above its high here. So I want to see the market close above the 50% of this. Note that this is not a bullish order block still. But if it close above the 50%, then it means that we have to go use that as a means of support. Trade higher into the 75% and above the high to create the order block. If we are correct, then I'm looking at this to be the second candlestick of a swing low. This is the first, and this would be the third. This is an expansion that I'm looking forward to if I'm correct. Therefore, we should use this as a support level. So this should send price higher when the market comes back into it. And the next time the market comes into this, because we've already been into the lower quadrant, I'm not going to aim for that anymore. I like this signature right here. If the market performs higher right now, we should see the market go higher with speed. But if we're correct, then if the market comes back here, I'm not aiming for the lower quadrant. I'm aiming for the constant encouragement because we've already been here. And if we are seeing the market perform with speed, I'm aiming for the upper quadrant. And based on a higher time frame perspective, if we go back to the 50% BT, then because we've already been here, we're going to aim for the 75%, which is a run with speed seen on a 1 minute chart. So 850 to 910. Looking at the upper quadrant, I don't like the fact that we haven't reached this auto block or future auto block high, which does not make it an auto block because we have not reached it yet. PDRA, PDRA, and the last. If we would have a trade on right here instead of this busy or this auto block, because I know that Martina prefers auto blocks, our stop loss would be still in the initial position because we have not reached the 75% of the implied dealing range, so the range that is not here yet. So if the market goes below this here, we would have to stop our sales manually and we would incur a small loss if the market indeed wants to do that. If we are still correct, I'm looking at the constant encouragement of this wick and this to be a sell stop rate. And you can see how the 75% of the implied dealing range, so the range from the current low to our unrealized target, 75%, that is when our stop is going to be moved at break even if we have a position here. And yeah, looking at the 50% here, sell stop run if we are correct. I like the fact that the body is closed above it. Looking at the 50% of this, same premise as this one. Swing low here would be more favorable because we have run sell stops, level of sell stops. I want to see the market close above the 50% of this and to start the expansion instead of these candlesticks. Because we have, again, traded into 75% and back into the 50% here, if we are correct, then the market should, if we're coming back into this, because we have delivered both buy side and sell side, the market should perform higher with speed. And you're going to see within one directional perspectives that this is going to occur. So the market will perform this, and then the next candlestick will just shoot up above these ones. That is just a level of engineered buy side. So it makes the retail traders think that this is a strong level of resistance. And yet again, we are coming back into the smart money paradigm, which is foundational. Looking at the auto block 75%, constant encouragement of this wick. And if we're correct, sell stop run. This should start the expansion. Looking at this here. Okay. And if we're going to go above this high that we have at the 830 CPI right now, I'm aiming for the 75% BT as stated. And the BT levels are between the buy sell liquidity, which was ahead of CPI, and the daily lower quadrant of the tail. But based on this market structure right now, if the market does not provide any form of support here, which does now, but if the market does not provide any form of support here and does not rally higher with speed right now, because I expect an expansion higher, then I would, or the probabilities would be lower for a an expansional run, and we would act with caution. So for PD race, looking at this mean threshold, we should not go past below it, and I'm looking for this right now. So if the market comes back into this, then it would be problematic. Beautiful closure above that level, along with the market opening with a volume imbalance. I'm looking at the consequent encroachment of this to provide support, 75% and 50%. And let's see what it wants to perform. I do not like to see these signatures right now in terms of a bullish perspective. Along with the fact that the 850 to 910 should start an expansional run higher, so we should see the market expanding higher if we're correct. But if the market still stays in the same dealing range after 910, 911, and 912, then that is another warning sign or a lowering of the probability of our movement. So let me just add the annotations that we discussed about. So this is a sell stop run. This will be constituted as the shift. As you can see, it is before the 850 to 910, but I've stated the fact that we can see it before with 2, 3, 5 minutes or after 2, 3, 5 minutes. So it is not standard to 859 cent. It is not. You understand what I'm trying to say. Plus market structure shift, institutional order flow entry drill, consequent encouragement of this. We went back a lot of times inside of this, and this dating range right now does not support or lowers the probability of this holding, because I've stated the fact that I want to see the market expand higher inside of this. It did not provide that premise. Consequent encouragement of this, market went higher. I was looking at this order block opening higher to this level. Then the market just consolidated here, so this is problematic. And 850 to 910 is consolidating. So if I would have had a position, I would have had a position here based on time and based on the fact that we haven't seen the delivery. I would just close the position. If we would have entered instead of the BISI or for Matino this order block, and I don't care if the market performs higher or lower right now, I would just go back into a 15. So if that narrative is still valid, based on looking at a 15, I want to see this as a breakaway. We closed a little bit above the consequent encouragement of this wick. I'm looking forward for the lower quadrant of this. I would not want to see the market come back into this. It can do it, but I would prefer for the market not to go back into this if we are correct. Then once the market comes above this, because we fell short of this, if the market is going to go higher, or let me just frame this like this. If the market was going to go lower, then the market should have no business into going to this level. If it does so, then it will do it with speed. So the levels in which I want to see the market find some support in, if we're correct, is this lower quadrant and as low as this BC low, I would prefer this to be left open. This is what I wanted to say. This here, I would see as a balanced price range dealing range. And you can see how it correlates with the lowest speed array being this one. But if I am incorrect, then the market will go past this and it will attack these levels of sell side. But my premise is based on the fact that retail is short because they have seen the major sell stops run within the weekly chart. So let me go back into a 1 minute and also look at the closures below the 25% BT. And between this and this, 75, 50, 25. Okay. Let's look at this here, how it performs. And for a bullish idea from this, I would have exited here or in the candlestick prior. So I'm neutral right now, but if we were to be bullish, if this was a normal day and not an intraday volatility perspective day, you would see this as a sell stop run, as this can run for a BISI. And when we have a BISI with a volume imbalance, you're going to take them like this. And for Martino and for Joshua too, if you're aiming for a buy inside of this BISI and looking for the second candlestick of a swing low, this would be it right here. If we are correct, I like the fact that we have left this highs, relative equal highs here. And this would be the last line of defense for the market to go higher. But again, the time period in which the market should have performed this signature is not ideal. So my exit right here was based on time. And speaking on, again, a one-directional premise and a one-directional narrative situation, if you would have been met with this, you can take this. If you would have had an entry here, you could have added another one here. But let's assume the fact that this would be a one-directional and a clear to see market. What I would do is I would instantly label this as an inversion gap, because if we're going to go higher, this will perform as an inversion gap. I'm looking at this to fail and this to fail. So these are inversion levels that I'm looking forward to. for anticipatory skills sake, I'm not looking at this as a shift. I'm looking at this as a sell stop run. I'm looking at this as buy side, and this one again, buy side, and the consequent encouragement of this. Upper quadrant of this, consequent encouragement of this sale. I like the fact that the market closed at the 75% of this busy. So this could be the third candlestick of a swing low. If the narrative is still valid. And again, if we are valid, the market should see no respect of this at all. What I don't want to do is I don't want to see the market close below the lower quadrant of this busy right now. So I'm looking for this to be a swing low. Yeah, this is what I didn't want to see. Consequent encouragement of this. Let's see how it performs. We still haven't closed below that. Should see no respect to this. This would be labeled right now as an expansion order block. You can take this singular candlestick, or you can take all of them and look for the mean threshold. And when the market closes above it, you can use it as a means of an entry. And I do not mean for you to entry right now. I just give you one way in which you can, or two ways in which you can use this information. I like the fact that we never closed below the consequent encouragement. Remember that I've stated that I did not want to see the market close below the 25%. I would have preferred for the market to create a swing low instead of this candlestick. So no respect of this, no respect of this, and no respect of this opening price. And if the market reaches these highs here right now, then it will go higher with speed. Looking at the consequent encouragement of this, consequent encouragement of this, and the BC high. Look at a 15. When past the lower quadrant, market might want to perform inside of this. So you have now seen why I don't go into the 850 to 910 macro. And that's why I specialize on 950 1010, 1050 1110, and 1150 1210 if it does so. So what I'm going to do is I'm going to wait for the 930. But everything that I've talked about, every signature that I've talked about instead of the 1 minute chart will absolutely perform if the narrative is correct. So if I was in the correct time, and I've told you based on time, I'm going to exit if I had an entry. If I was in the correct time and in the correct 15-minute narrative, then everything, I'm telling you, everything would perform exactly as I've stated. So what I'm looking forward to right now, instead of the 15, I would not want to see the market reverse. We've taken a level of buy side, the market can reach a discount, but I'm looking at this level of buy side being rated not as a means of a level of buy side being rated and then a reversal. I'm looking at the level of buy side to be taken and a continuation higher. So all of the retracements that we're going to see on a 15-minute chart are going to be just retracements, if I'm correct. And my idea is that we're going to retrace back into this. This should be a balanced price range dealing range because the market went back, rebalanced this, and we took the short-term high out. So this entire dealing range, this is done here. So I'm looking forward for the high, upper quadrant, and the consequent encouragement of this. And this would be a perfect retracement for the 950, 1010, or 1050, 1110 run above this high, because we have left this intact and we have also left this intact. So if we're correct, this is a good level in which retail sees resistance. And while I'm going to wait for the 9:30 opening, I'm just going to go quickly to the bathroom. Give me 1 second. All right. So, one more foundational premise that I can give you in terms of the top-down analysis and based on the rules, like being rigid, very rigid with your rules and being proactive and not reactive, is that whenever the market performs a certain signature within the 15-minute chart, that is the only time, or the 30-minute, whatever time frame you prefer, and you have backtested, of course. And I'm speaking for Joshua because he prefers the 30 minute, and I see Martino using the 5 and the 30-minute also, so perhaps that's your charts, and also the 2 hour. But when you see the market perform a certain signature within the 15-minute chart, that is the only time in which you're going to switch to a 1-minute chart. So when the market comes back into this busy, that is when I'm going to look at the 1-minute chart. And when I switch to the 1-minute chart, and again, the reason why we do this is because we anticipate the market to go into this and then higher. But when the market reaches this, right, every singular signature that has been performed into this level or whatever that level is will be seen bullishly. So it means that this would be a sell stop rate, that we should see this inversion gap, or this perform as an inversion gap. We should see this as a future market structure shift, and we should see this as buy side and as buy side. But this gives us the when. When do I see all of the signatures within my favor? When the market comes back into this. So if you, of course, if you have multiple screens, of course you can plot the 15 and the 1, 2. But I would recommend for you to only focus on one at once. Only focus on one chart. And when the market performs something in the 15, that is when you look or you switch to a 1-minute. And you also have the other, like the signatures that you do not want to see perform. So while I know that when the market comes back into the busy, I'm going to switch to a 1-minute, then I'm going to wait for a 1-minute 950 1010 market structure shift. So the first condition is busy. Second condition, to be very opinionated, is 950 1010. And within that 950 1010, there's a market structure shift. And when this happens, I am going to be highly opinionated. But at the same time, I understand the fact that if the market closes below the 15-minute consequent encouragement of the BC, or whatever, in this case, the consequent encouragement of the BC, then I am wrong. But the thing that you have to do is you have to do everything that you have decided beforehand. And once you enter the market, that is the time in which you have no longer control of anything. Until then, you have control. After you enter, there is no control. And you have to submit to it. If you're wrong, then you have applied the pre-decided rules. 15, 1, shift, 950, 1010. So the rules are not the problem. So there was something wrong with your narrative. That's how you trade non-emotionally. So you set conditions. I'm not going to look for anything higher if the market does not perform this. And let's just assume the fact that the market never comes back into this and it runs from the lower quadrant of this, which can absolutely do. What do I do then? Well, it was not possible for me to see this signature inside of this session because I have not backtested it yet. So what I'm going to do, I'm going to backtest it and see why it has performed this way. Well, the market was going higher with speed, so there was no need for this to be retraced back into. But within the current conditions, I've stated, I will not do anything until the market comes back into the busy. And in the beginning, while you cannot tell by experience, which I cannot give to you, in the beginning, you will respect this and you will be willing to let the market go without you. But with experience, you will understand when the market only will go back into the lower quadrant of this wick, and when the market will go back into the fair value gap and then go higher. So this is a short answer to a big question. So let's look at what the 930 will do. And of course, in the same premise, if you're going to look at a sell stop run, this is the 830 or 845 previous session sell side being run. When does this become the quote unquote previous session? At the 930 opening. So what are we waiting for? The 930 opening. So what I would prefer right here is of course, the market can go higher from this lower quadrant, and this would be a sign of strength that this would be left open. But I would more prefer for the market to leave these highs intact right now, to go inside of the next candlestick below this level of sell side, which can be done because we have this market structure here. And you can see how the time saved us right here. And I would want to see the market go into this. This is sell stops run. This is beautiful buy side. We went into the consequent encroachment of this. The next one we're going to aim for is this. But in the same time, we went into this, 75%. So the next one is this. What I'm also looking at is the mean threshold of this here. And if we're going to leave this open, if we're going to start running now, then this can be a swing low. We can use the 50%, 75% of this on a higher time frame chart, or on a lower time frame chart as support. And if the market does not reach the BC, it is going to go without me. If the market closes below the consequent encroachment of this on a 1 minute chart and goes into the lower quadrant, I believe that it is problematic for our movement higher. So let's look at how this 1 minute chart looks like. And I switched to the 1 minute on the premise that this is what I was talking about. Market opened, lower, higher, fell short of this, closed below this. So when the market opens, lower, consequent encroachment of upper quadrant, higher, and if we're going to go above this, yet again, we're going to go higher with speed. But it is not 950, 10 cent. We have not seen a level of sell side being taken, or this can be labeled as one, but I do not want to say that as a sell side being taken. Inside of the 15-minute chart, and I know that this is very much detail, but you're going to go through this once again and you're going to study it. Inside of the 15-minute chart, we're looking at the expansion. So perhaps this is not going to be revisited. So this would happen. So what can I do right now? What I'm going to do is I'm going to wait for the next candlestick to to open. And I would prefer for this to remain in price. And I would look for the next candlestick, which opens at 9:45, to form, if we're going to go like this with speed, the same signature that I've stated. Market opens, goes back, forms a fair value gap, in this case a breakaway. And if it forms a breakaway or a fair value gap, then it means that the market should open, only go into the 75% or 50% of this candlestick right now, because this is the second, this would be the first. So therefore, when the market opens right here, when the market reaches the 75% of this candlestick once it closes, then and only then I'm going to switch to a 1 minute chart. I will want to see the shift, because in order for the market to go back into the 75% of this, it should deliver sell side, right? That also constitutes what? I know it's very much detail, but that constitutes the 15-minute AMD, and basically the AMD is open, lower, and once it goes lower, what are we waiting for? The distribution. So the accumulation, manipulation, 75%. I don't want to see it go here. I prefer for it to not go into the 50% of this once it closes. Then once the market goes back there, 1 minute chart, sell stops run, shift, 950, 10 cent, this and this. All of it based on the expansion premise. And all of that expansion premise, again, coming back to the foundation, is because retail wants shorts. So CPI in this case will go higher. And CPI went higher, and we're going to continue higher after 8:30. This is what I would want to see. So as stated, market went to the 50%. If we're going to go back there, we're going to do what? Go higher with speed above it, because we have delivered it. If the market would have been bearish, this should have never been revisited. But if it does so, then we're going to go higher with speed. And for a general perspective, again, I want you to internalize or try to see this as a daily chart. If I'm looking forward for the next candlestick to be the next day of trading, the low of the day can be created in the 75% of this auto block high, and as low as the 75% or an immediate rebalance. So what do I wait for in the next day? Market opening on London, creating the low of the day on London, where here, or in the 75% in the best case. And after that, instead of the AM, what do I expect? The market to continue higher, because we have already done what? The low of the day. How do you know, Stoyan, when the low of the day is going to be created? I've just explained right here. Drawn liquidity, institutional order flow signatures, algorithmic phases. What phase are we in? Expansion, and the rest is experience. And forgot to mention that the next candlestick within the 9:45, as this candlestick closes at 9:45, because we're looking at a 15, is also correlated with the 950 10 macro. So you can see everything correlating beautifully. And of course, another gem that I'm going to throw inside of this AM session tape reading is, I've stated this a lot of times, so I'm going to state it again. Why do we care about the 950 10 macro, or a macro in itself? Because a macro time period is between the last 10 minutes and the first 10 minutes of an hour. And it is based on an hourly chart. And let me tell you why we care about a macro time period. And again, look at this. First candlestick, second candlestick, and the third. Where did this go? 50% of the previous hourly range. The reason why we care about the 850, 910, 950, 1010, or whatever macro is because market goes here and closes at what hour? In this case, at 9 o'clock, because this is the candlestick that is responsible for 850 to 910. Let me just give you this example here. Market opens 7 o'clock, which is 650 to 710, goes lower, higher, and then we're trading here at 750 to 810. So we're trading within the close. But here, and we are still within the 750 to 810, market opens at 8 o'clock. But the market closed above this 50-minute inversion gap, right? So what should the market perform here? Well, the AMD on an hourly chart. How low can the market go? Instead of an expansion, what are we looking for? The auto block. Market opens. How low can it go? Here. What is this? Open, manipulate, distribute. So the macro time period, and this is the first time I say this definition. A macro time period is the difference between the closing phase and the opening and manipulation phase. And there is a macro time period for a daily chart because everything is on based on every time frame. But I want you to internalize the fact that the macro time period is the difference between the hourly closing of a candlestick and the opening of the next. Why do we want to see the market expand or start the expansion within this time period? Why do we expect it? Because we expect the market to open, go lower, and then create the distribution higher with speed. When is that going to occur? Within, in this case, 750 to 810. So 750 closes, 8 occurs, goes lower, and then higher. All of this happening within the macro. How low can we go? This auto block. Because we're expanding. There you go. You now understand why I specifically tell you to only trade a macro time period. I do not trust these lows right here. And let's go back into our 15 and our 945 candlestick. A lot of gems dropped instead of just one session. But I believe you're going to be able to handle it because I know how dedicated you are, both of you. So, premise. Despite not liking those lows on a 1 min, I'm looking for 945 to open to form this fair value gap here. But at the same time, I'm very cautious because of those lows. Very cautious with the fact that the market can consolidate here, go back, take on this low first, not taking on this high, which would provide some form of a retracement. Then, and this then happens at 10:50 when the market does what? The market attacks what? AM session sell side. What is the AM session sell side? Between 9:30 and 10 o'clock or 9:30 to 10:30. How do we use the 9:30 to 10:30? Why do you use the 9:30 to 10:30? I just told you. That is the AM session sell side or buy side, and that gives us information for the lunch time period. So that's how we use the 9:30 to 10:30. So if the 9:30 to 10:30 consolidated, we're going to take this information within the current narrative. So we want to see the market go here. So if this consolidates based on 9:30 to 10:30, going to expect the lunch because we're using the previous session model. Going to expect the launch to take on the sell side because it's the AM, and then expand towards what? This buy side because it's the AM. So you right now see why this is the best model you can have. And of course, the old boring saying that everything applies to every time frame. So if you're going to look at a daily chart, you're going to also see it with the means of, I did not teach this to Joshua yet. I've taught this 1 year ago to Martino, which is the quarterly shift, which is the market having a tendency to switch to attack a previous level of sell side or buy side, or switch the current narrative on a 20 to 40 to 60 days. It's a lot, I know, but this is how you apply the model to all time frames. This is how you apply the AMD to all time frames on a brief explanation. And the difference between you and me right now is just experience. But of course, when you're going to look back at this 1 year or 2 years from now, you're going to understand exactly what I mean if you genuinely do the right work. And Martino knows how this feels right now, because I've told this to him 1 year ago when he did not even know anything. And if he looks back at what he knew back then and what he knows now, he's going to see more things. And the only way in which you can see more things is to allow time to do its thing. And I've told this to Kim, or I've told this to you, Martino, back then. And now you can see what I was talking about 1 year after. So it's crazy how time compounds, right? Yeah. So coming back to the chart, I don't like how this has formed here, along with the understanding of the 1 minute market structure. So I'm going to be patient and understand that this can be a consolidation, because the 830 ran higher with speed. So speed within a previous session can mean that the next session is going to consolidate, and consolidation within the previous session can mean that the next session will go higher with speed. So I right now favor the scenario in which the AM session consolidates, and the 1050 1110 or 1150 1210 will deliver my model, because it's 950 sell side, which is AM, 930 buy side, which is again AM, and it's bound for the lunch session sell side to take it. I've also stated that I do not want to see this high being taken, and I've also stated my conditions for this to work, for the continuation to work. I wanted to see the market create a fair value gap. Once the market opened at 945, I wanted to see the market go back into the previous range and continue higher. It has never performed. Therefore, my patience is now delivering results. That's why we trade only based on rules. Because if I would have just switched to a 1 minute chart and I would have seen the big expansional run, I would have said, fuck the rules, I'm just going to go in. And now you would have suffered, and you would beat yourself up because you knew that this would happen, because you did not respect the rules. And that invites a downward spiral, and the cycle in which I know very well that Joshua has been in. So I'm just going to wait. I'm not going to say much right now, because I've already given you a lot of things. Let me see if this is still recording. Yep. 2 hours. It's just the beginning. Sell stops are run. Busy. So therefore, what I'm going to do, 1M. I would have preferred for this to be in the lunch macro, but this can perform right now. So let me see. Let me mark this out so I can get the consequent encouragement on all of those levels. And if the market is going to perform now, this should not be seen as a swing high. So therefore, within the next candlesticks, when the market goes here, you know the story, the market should go higher with speed if we are correct and we are bullish. Also, one thing that Martino sees very good is that this would be the first candlestick of a swing low. this would constitute the second, or if the market opens a new one, the market can go back below this into the constant core span. But basically, I would want to see this one to be a swing low, the second candlestick of a swing low. And when I go back to the 1M, right now, this is when I'm very opinionated. So what is this? 845 CPI sell side taken. This is inversion gap. The market should perform above 950, 10, 10. First, second, and the third, which would also be what? The market structure shift. Again, you can see how beautifully this correlates. And I've counted the third P raise because this would be what it had to take if we were bullish, and to confirm our bullish narrative. One thing that I do not know if you see is this immediate rebalance, which if we were bullish, this should perform. If it doesn't perform, then it means that the market either consolidates or reverses. Beautiful level of buy side with this here. If the market goes above it with speed, if the market goes above it, then we should see the market go above with speed. This right here would be my entry. I'm going to buy this right here but I'm going to submit right now to the process. My take profit is here. Reason why is this is an inversion gap before the 950, 10, 10 shift. Stop loss is below the lower quadrant of this. I can also put it here because we've already went to the busy, so I'm going to put it below the lower quadrant. I'm going to put these. And what I don't want to see is the market closing below the mean threshold and using this as a means of immediate rebalance. Again, I'm going to remind you that this is a very risky entry. And this model is more riskier than the 950, 10, 10 shift because that provides more confirmation, quote unquote. So I can also be stopped out within this movement, and I would be fine because I can re-answer on this sell stop run, and I can re-answer with half the leverage if I would have more than one contract on. So if the market goes below this, or if it went below this, still I could use that as a sell stop run. But being very opinionated, sell stop run, inversion gap, mean threshold, I want to see this being taken now. Market structure shift is above this, buy side here. We saw the market closing above this. This was the mechanism for my entry. I have been stopped out, and I am not in any way particularly angry at myself or some emotion. I just took my model. This is my model. This is how it should have been performing, or this is how it should have performed. And I've done my job as a trader. If the market is willing to go higher without me, then so be it. And I'm just going to tape read this movement. Should see this as an inversion still. Market should close above this and this. And if the market goes above this, then this is a shift yet again, because this should also be an intermediate term high if we are bearish. Looking at the 50% on this, and I do not take in consideration this wick. So I'm looking at the bodies because this is a big wick. Let me mark this inversion gap out. So if we are still correct, then this execution stop loss would be on the basis of the when and not the how. So perhaps it is only the time in which I have executed, which is the wrong one, and the premise can still be valid. So if the market wants this level of sell side, like it does right now, we are still within the macro, we are still within the premise, and I am willing to execute one more time based on this premise, and I would do it if I could with a lower leverage when we go above this inversion gap. So I'm looking at the upper quadrant, consequent encouragement, and I would not want to see the market close below the consequent encouragement. So this is a sell stop run. Let's look at a 15 real quick. Okay. Market didn't close below it. Now, I do not like these signatures. And if the market discounts or rejects, not rejects, but if it does not perform within this BC, then I know that my narrative was wrong. And I just took a loss. And my narrative was wrong. I took my model. I took a trade based on my premise. And this is the only thing that matters. What I did wrong will be solved and will be reviewed later when I do my back test and when I see how the market materialized. And this will be just a lesson. And the next time this will happen, I will not do the same mistakes. And that's how that's how I grow. And what I don't want to see right here is I don't want to see a closure below the 15-minute busy. This retracement back into the low is completely normal. I would have preferred for the market to stay within the upper half, but because we took this level of buy side, the market can retrace like this, but I would not want to see the market go back below this. If it does so, then it can attack this and this discount busy and this level of sell side. So what I'm looking at right here is the consequent encouragement of the BC. I want to see how the market closes on a 15-minute basis. And the reason why you should wait for 950 tens and market structure shift is this exact one right here. So I have a model, and my model simply did not work within this time period. But you with your model, you would have not even executed upon this idea because you have never seen a shift. So that's how you would have treated this one. Right here, immediate rebalance. I want to see this fail, which would be the first sign that the market wants to reverse. This is a sell stop run. We closed above the consequent encouragement, which is a beautiful signature right here. I would want to see this as a breakaway because we have closed above the consequent encouragement, failed to retrace back into it. So I would not want to see the market go back to the consequent encouragement of this 15-minute BC neither. Once we close above the BC, which can also be correlated with a closure of this 15-minute candlestick at the high, I would want to see the market open, use the high and the upper quadrant of this BC as a means of support, and also this inversion gap if you close above it, like this. I would want to see it being used as support, and with this large down movement, I'm looking for consequent encouragement, mean threshold of this auto block here, this candlestick. And I would not want to see the market run this low now, which also correlates, if you're going back here, with this low here. So this should be the second candlestick of a swing low, if I'm correct. If I'm wrong, the market will go below this. Okay, I want to see the market close above 50% of this BC, and also this wick, and also this here. I internalize this as a retracement instead of this here. I don't like the fact that we gapped open here, but the market can form a swing low too. So the criteria for this BC is not invalidated. I would want to see this high being taken, this to be an intermediate term low, this to be a bullish auto block. Let's look also at the hourly chart. So this would be an immediate rebalance on an hourly chart. So the market should perform higher with speed within 10 o'clock to 11. So let's see. I'm looking at this here. And I'm awaiting for a closure above it to re-execute upon this idea. But I don't like how we closed below the upper quadrant. I would not want to see this being taken now. And remember, if we take this, then I'm incorrect and I'm willing to stay sidelined and not be opinionated about the AM, because I might be wrong and I should definitely not try to impose my will on the market and be angry like, oh, it should have happened. It should have happened. Why didn't it happen? And I'm going to try again and try again and try again. So that low right there, if the market takes it, I'm not willing to sit through anything. And I'm looking forward to looking at the PM session with the AM session detail in place. And this would be my AM session. So let me view this here so I can take a screenshot of the performance. And one thing I want to do before I go into my Notion is I want to state the fact that everything I have stated today will work in a good narrative. What I have lacked today is the narrative. That's all I have lacked, and I've stated that I wanted to see some form of intraday volatility and the fact that I was not sure on the bias. So this was the premise before I have opened up the chart. Let me just put my MacBook to 1 minute, 8, 9:50. Okay. 15, how does it look? So again, even if this goes above or below, I'm not opinionated about it anymore. I'm willing to let it go and have it based on incorrect, perhaps time or narrative. And I'm going to discuss the execution and the entry when I do my backtesting and when I compare what has occurred with what I have believed. And the difference is going to be seen as a lesson that I can learn. Let me look at the S&P real quick. S&P performed the same. Risk already performed the same. Okay. Again. I like the bodies. I would have preferred for this to not be taken. I've also stated that this would be the lowest point in which I would want to see the market go. But when the market performed like this, and this perhaps was one rushed understanding, so you can see me do this thing sometimes. When the market went below this, I was internalizing this as, okay, it will close below it and then the narrative would be invalidated, but I was not patient enough in this case to wait for the closure. And based on a 15, the market has not invalidated the BISI yet. We're in close proximity of the shift. This can also be taken as a shift. Breakaway, the inversion gap that I was pointing to. For the implied dating range, this would be it. We can see the market use this consequent encouragement or the inversion gap high. I would not want to see the market go into the lower quadrant or the lower half of this inversion and use this upper quadrant as a means of strength and close above the consequent encouragement of this. Okay, I like the fact that we closed above here. For the 3 PD arrays, this, and then this auto block, but we should never reach back into that. I am not going to buy this one more time not because I cannot see the obvious level of buy set above or the fact that the market went back into an inversion gap and has a high degree of probability that it can continue higher, but because not because of the things in the chart, but my focused state of being and my current state, not emotional state, but state is not highly focused. So I can see it go there, but I am not willing to force my narrative anymore. So I don't want to force anything anymore. We can see the market try to go there. There's relative equal highs that are obvious and the market can draw up into them, but for the sake of me not forcing my narrative and for the sake of my rules that state that when I'm not in a clear head or in a clear mindset, I will not take anything. Because then I would blame myself for knowing that I'm in this state, that I forced my narrative here and I stated that if I do not want to see this lot being taken, then I'm going to exit the AM session or not look at it. So based on that, I won't take any trade, but I'm going to continue the reading. Swing low here, auto block, consequent encouragement of this. Upper quadrant, I like the fact that we have opened with a volume balance here. So the market would normally use these levels. We can go back into this if the market wants to do it. But if we're going to expand right now and not retrace, but this is fine because this is a market structure shift, the market can retrace. We allow for this, but we prefer to see this. So I'm looking at this here at the consequent encouragement, the lower quadrant and the upper quadrant. I'm looking at this, and I want to see the market perform higher right now. If the market is willing to retrace, this can be a discount. This can be a sell stops rate. And I would prefer for this to be left open. And the market has no business going below this because we have run sell side 1 time, 2 times. I don't like this closure here. Okay, busy retracement. I don't like the fact that we have retraced this deep on a discount. Let me look at a 15, see how it performs. We should see this right now as a swing low, upper quadrant, consequent encouragement. This is what I'm aiming for. I like the fact that we closed above this busy and that we went back into the busy high. I would want to see that rejected with speed. And the reason why I did not freak out, quote unquote, about this big candlestick here is because we have 1, 2, and the third. So this would be the third. This would be the last line of defense. And if this is violated, then I was wrong, and I am glad that I did not force yet again my narrative into an execution. In tape reading, I can do anything because it does not hurt my account or somebody else's account if I execute upon or if I share my trades with anyone, which I'm going to do, and this is what I'm training myself for. And I'm glad that I can stay on the sidelines and I have the impulse control to not take anything based on emotions, which is going to be a long-term benefit. consequent encouragement is the last line of defense here. If the market closes below it or below the BC, this would be it. And this would be the end of my idea once again. And let me just state this thing right now. And this is more focused on Joshua, because I know that he has struggled with this. Imagine you would have done this exact thing. The previous Joshua, what he would do is he would freak out like, oh, I cannot see trading anymore. I cannot recognize these signatures anymore. I cannot do anything. And you're going to beat yourself up. The current Joshua, or the perfect Joshua, or the perfect whatever, Martino, what he's going to do, based on having a lifetime career perspective, is, well, fine, I was wrong. So what? I still have 10 years to perfect myself. So what is this? Like, okay, I've done this incorrectly today. This is a beautiful example of something that I did wrong, which, if I analyze and find the mistake, I will correct it. Therefore, I will progress. Therefore, I will be one step further into my goals. And the previous Joshua, or the previous whatever, would do the following. He would think that he is wrong, or the fact that these concepts do not work, or the fact that he sees something incorrectly, and this next guy has the correct thing, and I should look at these people because they do it right. But in the same time, I'm going to remind you, number one, that nobody has it 100%. And number two is that they lie on social media, and that they do not show losses. And if you're going to look at my YouTube channel, neither do I. Right? Because I mean, I've shown losses mitigation, but there's no point of me uploading the loss. I can do a loss breakdown, yes, but there's no point in me uploading them. I can upload them to Telegram, but there's no, like, in terms of documenting, yes, there might be, but most of the people have their social media based on selling and not on helping you as a trader. And I'm not going to lie and say that, oh, I did not have it one time or the other. I had it, but this is not who I am. My social media is mostly directed towards documentation and helping other people use the things that I also use. So the previous Joshua would look at these circumstance or this test, right, as, oh no, I have it wrong, I should look at these people, or I should do this, or I'm never going to be able to do this. But the current Joshua, what he's going to do is he's going to learn. Well, what did I do? My model states that I'm going to go long inside of an inversion gap before 9.50 and 10.10. Have I done that? Yes, I've done it. Well, okay. I've did my work as a trader, but the trade failed. Well, what was wrong? In this instance, I cannot tell you what was wrong, right? Perhaps the time, perhaps the narrative, because I do not have the chart materialized. But, okay, after the chart materialized, well, I can see the fact that the market went higher instead of the lunch session. So why was I not patient for the lunch session? Or what did I do incorrectly? Like, should I be patient the next time instead of to wait for the lunch session, or what should I do? Should I switch my narrative? And the market is going to give you that information once it materializes. But you have seen me not execute here because I would force my narrative into the market. And imagine I did execute, knowing that I was not in the right state of mind. Wouldn't I blame myself for the second stop loss? I would. If this was the past me, I would. This is why I'm so strict about you respecting your rule sets. Because the loss of mental capital is bigger than the loss of what? In this case, if I'm leveraging one contract, it is $30 or $50 or whatever, because I'm trading based on a $1,000 account. Who cares? I can take that within the next trades with leverage, with interest. Who cares? But the fact that I have recorded in my mind that I told myself, do not take it, which is a good voice, and I still disrespected that is going to be embedded within my habits, which means that this is going to reoccur, where I'm going to be fearful the next time to not do this, and I might miss on another opportunity. This, my friends, or my students, is the hardship of trading. It is not about the chart. The chart is easy. It is about you and how you handle yourself. So, UTC -4 for Joshua represents an opportunity to trade the 950, 1010, and 1050, 1110 due to the time zone in